And sincerely hope that you had a good break over the past 4 days. I think most of my friends across the globe had some kind of break, one or the other. So I've been out of the market since Thursday evening, and only came back just to kind of refresh myself late last night, and actively looking at the charts as we go forward. Okay, I'm just getting a flag here, but okay. So what I want to talk about today is just, well, let's go through the markets and just keep looking for opportunities as we go along. But I want to share with you just what I think are some key lessons that arise or arose out of the month ahead in March, which is a 20% profit. Again, of course, if you want to see those trades and look at the full breakdown of them, just chat to the admin, and I have no problem sending you the full history from the broker. If you want to have a look at them and see where I took all my trades, the losses that I made, the profits that I made, etc., if that will help you. But what I think is of real significance at the present moment is just some of the key lessons that I've learned. And they are not just lessons for the month of March, but they are lessons that have accumulated over close to 12 years of trading now, but all coming to a nice culmination. So before we do that, let's have a look at our setup. Now I want to show you just something interesting, another product that I've added to this trade, to the markets that I'm trading. So firstly, of course, as usual, by now, if you've been tracking me, you understand the daily setup. This is something that I do each and every day. And it's relatively straightforward in terms of the steps, but I always want to mark and indicate yesterday's low. That's yesterday being the previous day's trading. So it's a Monday to Friday's low. That's yesterday's low, the red line. Yesterday's high is the green line. And if you have to flip across all the currencies that I'm trading, you see the very same thing. Okay, yesterday's low, yesterday's high. So this become pretty routine in terms of the way that I look at charts. And if you are going to trade the same way you trade the 5-minute time frame, some of these things must just become routine things that you do. Then I'll talk to you about gold later on, but just for now, same principle: low of yesterday, high of yesterday. Then if you just go backwards, I think that you will notice, of course, is this magenta horizontal line, which indicates the open of the session. The open of the day. I had the open of the session marked. I'm not sure why I probably deleted the lines. Okay, so this 10:55 here, my local time, it is 5 minutes before the official opening of the London session, the European session marked by the London Stock Exchange. So just 5 minutes before, I do that because I always want to see who controls the very first candle, the very first bar of that particular time frame. So gold, you can see the bears control. It just gives me information. Going to the session was the strongest. And we'll come back to do a little bit more analysis as we go along. USD yen, first candle controlled by the bulls. And you can see we're pretty close to the low of yesterday. Canadian, first candle. Now that's interesting. Isn't that interesting? That's a doji. Okay, first candle is a doji. I'm continually asking myself questions. Well, why are we having a doji in the very first candle? Okay, why are we and that doji, although it's just one candle, it's a trading range. It indicates indecision by the market, number one. in terms of do we go high, do we go low, and also a fair level of agreement at that price. So that's something that I just keep at the back of my mind. You know, we have a breakout I need to see follow through, etc. And we talk about that. So that's on the Canadian. Then the euro, again, first candle, it's a doji controlled by the bears, but that sends a lot of signals to me. We are at the top of the trading range of the Asian session, and we have a doji on the open. So right there, I'm going to ask myself questions to say, are we likely to have in terms of a macro pattern, is the day going to end up as a doji, or are we going to have a decisive breakout away from that? So that's kind of the early view of the market. We're going to keep looking at it over the course of the hour. But in terms of key lessons, so here's key lesson number one that if you're making notes, I just need you to bear in mind. So I'm sharing key lessons that have gone into a 20% profits month. Now, let me just say something. 20% profits in 1 month is beautiful, is nice, is excellent, all of those things. But it's not the optimal. It's not the best case effort. You know, I came into the market and I had a look just what's happening in the most immediate, and I had a look at most immediate days. I had a look at the yen. I think it was the yen yesterday. And just looking at that and having a quick look, refreshing myself, I was pretty amazed to see that move there. Now, that move there is preceded by a whole move on the left here that corresponds to a setup within one of my strategies. So, and the point I'm raising here, I had a quick look at that, and I do this quite often. And it's one of the things that I'll mention in terms of lessons. I had a good look and I said, okay, had I been in the market, had I been focused, had I traded my strategy exactly as I ought to trade it, how would I have traded it, and where would I have made money, where would I have lost money? Now that move on its own, if you just traded a straightforward 1% risk and trailed your stop and did all of those good things that we've spoken about and we continue to speak about, that move could easily just have been a 12 to 15% move, just by focusing on that. But if you also know how to make the appropriate decisions, I'll talk about complex decision making, knowing where you bank some profits and knowing where you can use some of that profit that you banked for the day to take trades at higher than 1%, 2%, 3% risk. That move alone could have created for you up to 20% profit. Now, I'm pointing that out just so that we don't get stuck on, my goodness, 20% profits in a month is absolutely the optimal or fantastic. We can make much more. Now, here's something to bear in mind. Patterns like this don't always present themselves every day. In fact, I have found that a pattern like this, almost a perfect pattern that fits to strategy, you might get those once or twice a month, okay? Once or twice a month per currency pair, and if you're looking at 3 currency pairs as you've been looking at, and I've added gold or onto the charts, that means you might get, 4 to 8 opportunities every month to get into a trade like this. But I spoke about random distribution. I think it was last month or earlier on. You don't know when they're gonna come up. You know, this pattern, you might wake up nice and fresh, ready to trade the London session, and you scroll to the left, and voila, this happened during the Asian session. Well, you were not there during the Asian session, or you might like I like to do, get up and trade the Asian session, and you don't find the pattern, and you trade in the European session and trade the open of the US session, and then two hours into the US session, the end of the European session, say, okay, that's it for the day. You come back in the morning to look at your Asian session, and boom, this kind of pattern sets up in the US session. That's the beauty of the currencies markets, 24/7. You don't know when it's going to occur. All you need to do is to prepare yourself that if it does occur when you're in front of the chart, you just have to execute, and I'll talk about that. But what I want to get us into, get into our minds is that if we're clear about these steps that I'm going to talk about, the opportunities abound. You don't know when they're going to come, so you don't have to sit in front of your computer glued Monday to Friday, 24/7. Just do whatever you want to do. Trade when you can. Take the trades when you can. If the opportunity is not there, it's not there. If it's there, maximize the opportunity. So I thought that was interesting, and I looked at it and I said, man, what a beauty! But I was not in the market, So that's just where it is, right? So I need us to bear that in mind. So lesson number one, and today I'm just going to keep a close look at what's happening on the charts in case something pops up for us. So lesson number one, in terms of making 20% profits in a month, I mean, that's a good return because you're not going to get 1, 2, 3% from banks in a year. Number one, become a master at reading price action. You have to, if you want to set yourself a goal to become a master at reading price action. Now, how do you become a master at reading price action? Well, you embark on courses, right? I was introduced to currencies trading almost 12 years ago in corporate role with the founder and head of Actions to Work. Was one of my early coaches in those days. That's when I was introduced to currencies trading. And through that period, I quickly learned the kind of style of trading at a very unformed level, what I enjoyed. I literally tried everything to discover what I would ultimately become good at. So price action, pure price action trading, well, it's a bit of a fun because pure price action trading means if you're looking at the charts, you don't have anything except price action. But I do use moving averages. I found that for me, that is what works. Now, whether you use indicators of any sort, whether you know how to automate stuff, it really doesn't matter. At the very raw level of trading, there is price action. All of us have to understand price action. Whether you end up trading using price action only is something else. Okay, so when I say become a master at reading price action, in order for you to start earning these good profits, you have to be able to read price action independent of any indicator that you then add into to help you filter out price action, just like I do with the moving averages. So how did I become, how did I master price action trading? As I said, I went through many courses, but ultimately, I came across our Brooks trading course, Brooks trading course. Our Brooks is probably recognized as one of the foremost price action traders globally. He's a retired eye surgeon. He's dedicated over 35 years to this. He's got courses. He's got all sorts of. He trades everything, primarily the E-mini, but he trades all sorts of things, all kinds of time frames. He's just a good at what he does. So, and he calls his course the MBA of price action, which I kind of agree with. But that's the route that I took. You can take any route, you can take any pathway, and when the teachers present you, whatever they present you, you have to choose to master that. It can't just be something that you kind of know of, and the earlier you make the decision that I'm going to master understanding price action using what I am learning, the better it will be for you. You fast track the process. It has taken me all of almost 12 years to get this to this point through, just a lot of things which I'll mention in my second point. So number one thing, set a goal, become a master at reading price action. And you learn to read price action using whatever courses that you have embarked on or that you subscribe to. And if that doesn't appeal to you, explore, find other ways. There's many teachers that come through on ATW. Find who's trading in whatever manner and see if that appeals to you. And if that appeals to you, become a master at that. Just take your time. And how do you become a master? You've got to print out these charts, man. I mean, I've printed out, I think, reams and reams of A4 charts. Just print them out, sit there, mark things, because you're trying to get your brain to start to recognize this stuff. There is no other way, unfortunately. Don't believe anyone who tells you there is a shortcut to this. There is no shortcut to looking at charts and printing out charts. If you don't like to print out charts, just scroll back on your screen, remove all the lines, just look at stuff and until you start to see kind of forms and patterns working. Okay, so that's number one. Let's have a look at what's unfolding before us in markets here, so that we kind of stay abreast of what we got. Okay, so on the euro, okay, this is kind of where we're at now. What am I looking at currently, or what's visible in front of me? I mean, you can clearly see by the time we came in, a bit of a trading range here. So always when I see a trading range, very quickly you can just put a measure move. Why is that? The market breaks above that trading range, it is likely to get to a measured move. Okay, so we would need to see a breakout. The breakout is a breakout candle. There is a breakout candle. I would have loved to see follow through to confirm the breakout and then trade in the product. But now we didn't have that, so we need to see if we get any decent setup we want to trade here. On the other side, if we're going to get a break beneath that, that's the extent to which the market will go. So the way I trade, I always like to see a confirmed breakout. The confirmed breakout is the high of the trading range. Would have been breakout candle and follow through and then a pullback. That's what I would trade. As it is, that is not a confirmed breakout for me. So any setup here, I'm not going to trade. However, if I get, for example, that candle follow through, so we're breaking above this test of yesterday's high, then I'm going to look for a pullback. But the goal is always here, right? That's how far. We may go higher than that, but that's where we take profit and look for the pullback. I see a question. I'll have a look at it just now. This is the Canadian. So the markets broke above a tight trading range here, and there was follow through. So decent enough breakout. And at that stage, if you're in the market, if I was in the market at that stage, I would have been thinking, okay, breakout. That's the extent of the breakout at that stage. I would have been waiting to see if I'll get a pullback. I probably would have taken that with a stop here. Okay, that would be a decent enough trade with a stop here, seeing if we get there. But we've gone sideways, so at some point we might have to get out of this because we're not breaking out to the level that we wanted, right? So we could get out with a small loss. You don't have to wait for your stop to get hit. So if you're taking that trade there because of the confirmed breakout, okay, to get out anywhere within here because we didn't get the resumption that we wanted. And the USD yen, I mean, as you can see, let me say as you can see it, that I can see it. Let's just make sure we can all see it. So we had, let's just look at there. So we're that high. And yes, that's an attempt to break above that, and the market is going higher. So at that point, I would say to myself, okay, if we break above that, that's how far I think the market will go. Okay. But again, we don't have the confirmed breakout. So when I say confirmed breakout, in writing down my stories, I'm always clear. I need to see what a confirmed breakout is. So market can just strike up there. I'm not really concerned. I'm not jumping into that. I'm going to have to wait and see what we get. And gold, well, let me just talk about gold very quickly. I've been looking for a fourth product to add to my products that I trade. So I've traded these three currency pairs, the majors, Euro, CAD, and Yen. And I was looking to add a fourth one. And I did consider, well, I did put in the cable, GBP USD, but I just found I wasn't comfortable with the correlation to the Euro, and I wanted something completely different. So I spent a bit of time just thinking and working out which other currency to add. But ultimately, I ended up opting to add gold. Gold trades as a currency, but it is a commodity. So for me, it provides sufficient risk diversification. If you want to know, that sounds very, very smart and technical. It really doesn't bother me in terms of to what extent is gold diversified from currencies or whatever. All I know is I'm able to trade it because it's a commodity and I want to be in a commodity. I didn't want to add a fourth currency pair because there I was really concerned about correlation. But whether I added gold or bananas or oranges or pork bellies really doesn't matter, because once you see a chart in front of you, the price action that unfolds is the same. So what I'm looking at now, if the market was to break beneath this trading range, it's likely to go there. But have a look at something. Just put the breaks above. That's measure more of the trading range. So what do we have here? We have a double bottom that is formed, okay, with the earlier low of the Asian session. Now, because I'm in this particular session, I'm interested to see if that double bottom holds. So here, if we have a resumption up, close above moving average, I'm happy with that double bottom. This session, and an earlier double bottom, and all I'd like to see is higher low, higher low, low higher than that double bottom, and then I'm happy to trade that. And first port of call is to take some profits out of here if you want, if you're not going to be in the market. If you are going to be in the market, then just observe and see if you do get a breakout and the market tries to get up there, and see if you can get an additional entry there. Let's have a quick look at question. Actually, I'm not missing anything else. What makes bar by bar different from price action and support and steadies? I'm still kind of confused as to what makes a bar by bar or is bar by bar. Let me see the next list. Another question to answer there. The pattern you refer to occurs on the 5-minute time frame. Okay, so let's start with where the patterns are only referring to the 5-minute time frame. Now, there is a saying which you might have come across, a phrase that says the markets are fractal, Fractal. The markets are fractal, market patterns are fractal. All it means is that the patterns that present themselves on this 5-minute time frame are exactly the same patterns that you would see on a 60-minute time frame or a 50-minute time frame or a daily time frame, weekly, monthly. The price action patterns that you see are exactly the same. If we were to remove the time markers and indicators, or if you were to ask me and say, okay, George, which time frame is it? There is no way I'll be able to tell by looking at the price action patterns to say, oh, these are 5 minutes, or these are 15, or these are 1 hour. The time frame doesn't matter. Whatever patterns we're looking at here, if you trade an hourly time frame, all it means is that these candles will be every hour. If it was a daily, these candles would be would be every day. So it really wouldn't matter how it unfolds. Let me show you something. I'm going to show it on gold. You see, we have a double bottom here. Let's just jump to the daily time frame. Okay, this is daily time frame of gold. We have a double bottom here. If I didn't know by clicking on the daily, I wouldn't know that this is on the 5 minutes or on the 60 minutes. Still a double bottom. Now, because I have a double bottom here, what am I going to trade? If I was trading the daily time frame, I would love two things: either a pullback and then a reversal here, 2-bar reversal of sorts, which gives me a higher low. Okay, so there's my setup, but I don't trade the setup. I don't trade the original pattern. I wait for the reversal that confirms that the setup is going to hold. So the higher low somewhere here will confirm for me that this double bottom might hold. 60% chance, so let's close it out. If we don't get a pullback in the higher low, then what I would want to see is successive book candles, a break above this this high here, which is the high, the apex of that double bottom. Break above that, and then a pullback. If I get a pullback to a moving average within here, then I'll take it. So that will be fine. So either a pullback, higher low, or a confirmed breakout, confirming bullish strength, and then a pullback. That's what I'll trade. But you don't know whether that's happening on a 5 minute or that's happening on an hourly time frame. Now, the other question was, what's the difference between price action and bar by bar? Well, price action unfolds bar by bar, if that makes sense. Your price action, and now we're looking at this set of candles that we've got. So 48, 49 candles. Okay, there's a pattern that's forming before us, but that pattern is formed individual bar by bar. So reason I look at my trading as bar by bar is I would have been tracking this. Okay, if I was in the market continuously before this open, I said, okay, there is a decent reversal candle bar. I'm happy with it. Let me see if the market is going to come back to this level again and what kind of bar I get. Okay, so the market comes back to that level. I get a decent reversal bar, so I'm happy with that. That's another bar. But then I got to wait to see what else the market. So now I am in this new session. That's trading. I want to see if in this session the double bottom that's been formed for the prior session is also going to hold. So the market comes back. First, I get that, which I would have been happy with. But then that failed, and the market attempts to, the bears attempt to break beneath that. But at that same level that we had here and here, there is a reversal. It's a bear candle, but the bulls bought into the close, and this close near its midpoint. So I'm happy with that bar, but I'm not trading that. I need to see. So now I have a double bottom, confirm that I need to see if I'm going to get a close above the moving average. Why do I need a close above the moving average? I need to see that the bulls are strong enough to put at least one bar must close above the average price, which indicates to me that at that point, the market is saying the average price may be too low, so let's close above it. So there's agreement that the market closes above that. So there are a few seconds to go. It's a bull candle, but if it closes beneath the moving average, I'm not comfortable taking. I want to see the bulls being able to close above the moving average. Okay, so which means that there's an agreement that the price needs to change. So with a double bottom, that bar, that particular bar is a decision bar for me. Few seconds, let's see what happens. So far as it is, I'm looking at it and I'm saying that if the bulls are strong, they have to at least close above the moving average. If they close above the moving average, then okay, happy days. Let's keep looking to see what we get. And they're going to give us another full candle, full bar closing above the moving average. So, for example, here we had the full candle closing above the moving average. So we just crossed over. And it's the next 5 minutes, next hour. and we're closing right at the moving average. Okay, I gotta wait. There's no way I'm gonna jump into a trade and say, okay, double bottom trade. I gotta wait. I want to see the bar that closes above the movement. That shows me bullish strength. Once I see that, then I'm gonna wait for my higher low. Okay, so it might be a pullback after that. Not a problem for me. Wait for a higher low and the 2-bar reversal. Again, another bar that confirms the market was reversed. Or here, instead of the market starts to pull, it's bouncing off the moving average, and it comes down here. So I'm now saying to myself, again, we got double bottom, but why are the bulls not giving me one single bar, at least that shows strength to close above the moving average? Why are we tracking back? Why are we bouncing off the moving average? So maybe this now starts to become a pretty significant lower high to look at. It's still not decisive because the bears have failed to close beneath this level here. But if the bulls are failing to give me a close above the moving average, well, are the bears going to be able to give me successive candles that close beneath this level? If they're able to give me one bar, one bar that closes beneath this level, good. Then I want to see another bar that closes beneath that, and then I can start to look for my trades. So bar simply means don't just look at a chart as just a mass of candles and just say, okay, oh, it looks like it's going short, let me trade. Understand that each individual bar, each individual candle on any time frame is giving you so much information that should feed into your decision making, so that you make decisions that swing your probabilities more towards that 60% probability chance of success that we're talking about. That's what we want to get. If 60% chance, if it starts to break out, it may be higher, etc. So that's what I mean by buy. We're still in price action, but we have to understand how the market is unfolding. The patterns have a good win rate cause I try trend trading, leaving those profitable at the time. 30% win rate is bad for my psychology. Okay, so the question is, do patterns have a good win rate? Because I tried trend trading, and even though it's profitable over time, the 30% win rate is bad for my psychology. So here's my response. If you are trading trend trading, your win rate should be more than 30%. With trend trading, your win rate should be 60-40%, at best 70%, even more. And I'll tell you why I say that. Because the way I define trend trading, remember I showed you the yen from yesterday. Let's see if we can pick up something good quickly to answer that question. Okay, this it's not a skill, but if you are trend trading, all it means is that you have identified that your market is broken. In this case, broken is at a breakout into a bad trend. And if you have correctly identified that you have had a breakout into a bad trend, then all you are waiting for is any test, any pullback to the moving average. Okay, so based on what we've seen here without much analysis, the trade you could have taken off the moving average. So if you're trading off the 20 moving average, you wait to see a decent reversal of the 20 moving average. I don't see any. But the 10 moving average, remember I put up the 10 moving average because it shows me when you're in a strong breakout way to take trades. That would have been a decent one to take. Inside candle, bear candle, just testing off the 10 moving average. That's probably a decent trade you would have taken. I'm just flipping through to see if anything else would indicate the point I'm trying to put across. This is a breakout, so let's not look at that because it's a complexity of a breakout, but you could trade that. We could trade here, depending if you had seen this. bit of a complexity, measured move, market is a measured move breakout beneath here, and then reverse. So, this is a comfortable way to trade. Wait for the breakout. Pullback, you don't want to trade that because higher risk bear candle. Breakout, another pullback off the 10-moving average, so you could trade that or trade that. But this is purely just trading off the trend. So the reason I'm showing that is just in response that if you are trend trading, by trend trading, my definition is make sure you get a breakout. Don't trade the breakout. Okay, you can, but don't trade the breakout because of risk parameters, the pullbacks, etc. But if we define trend trading, then what we need to wait for is a pullback to the moving average. When you get a pullback to the moving average and the reversal of the moving average, that's a trade that you take. If you take that trade and you resize it properly in terms of where you put your stop, and you do that consistently, your rewards for certain will be at the very least 60% profitable. And if it's a fast-moving trade, it should be 70%. So, it would be interesting to have a chat on that, and we can do that via the administrators. We can have an offline chat so we can look at how you are trend trading and give you some inputs there. Okay, so so we just had a look at gold. So the second candle we had closed also the moving average. Now we're having a candle above the moving average. Let's see if that closes strongly above the moving average. If we got a breakout here, just back to the question we were talking about. So let's say this closed above the moving average, and then we had a follow-through candle that was a breakout, and with confirmation that's the next candle, whatever size, doesn't matter. And all we're waiting for is a pullback to the moving average, and then we're starting to trade the trend. Then we can take that particular trade. So, number one, become a master in price action. The second thing that you need to do in terms of getting yourself geared to make these profits that you can out of currency trading, I just call it, if you remember I said number one, become a master in price action. Number two, earn your doctorate through the trials and fires of live trading. Any teacher will give you, or any good teacher will bring you to a stage of obtaining an MBA in price action trading, or in trading whatever strategies you're being taught. Okay, so whatever strategies anyone teaches you, if you really follow and study and be diligent, you can get to be as good as your teacher and earn the masters. That's an MBA in trading. In reference to what I'm trading, it's an MBA in price action trading. But that's about how far the teacher will take you. And yes, you can make you make good monies out of that. But if you really want to get, this is about 10,000 hours of experience and 10 years experience, and you can fast track that process for yourself. Let's just do this so we keep an eye on what else is unfolding. Okay, so I'm talking about going beyond the MBA. You have to live trade. You have to look at the charts and trade live. And trade a small account, as small as you can, and trade as small risk as you can. You don't have to trade 1%. You can trade 0.5%. You can trade 0.25%. Trade small, but trade live. And why do I say go through the trials and fires of live trading? Because you are going to make mistakes. You are going to lose money. You are going to make money, get emotional, get excited, come back, lose it, etc. You make money, lose money, but you have to go through all of those ups and downs of emotions. You will blow up accounts. That will happen, because of just the fervor and the excitement and the things that happen when you're live trading. That's why you have a small account, and those things will happen. But there is no other way to go from this MBA of price action trading to the doctorate level. I earned a doctorate in business leadership, And the process of earning a doctoral degree is it's a lonely process, because it is just you and trying to find that little niche or sliver of knowledge that you can present to the academic world. And that's what you want to do. You want to take all the knowledge that you've got and really try and find, I think just like the last question, the last post I said, is I've tried this doesn't suit my personality. I understand that. And that's, I have to say that's beautiful, because if you've come to the place where you start to realize this doesn't fit my personality, that's a beautiful place to get to, because not everything will fit your personality. Teachers will teach you what works for all personalities. That's what I found. They'll teach you what works for all personalities and what works for them. And you find their own biases. You begin to understand what they instruct you. Ultimately, you want to take that knowledge. You want to earn your own doctoral degree in trading, which, in other words, you've now personalized this business to your own personality. Okay, so go through the trials, go through the fights, try things, go through the frustration. Don't give up. We can't afford to give up. Or if you give up, this is not your business. But there is no other way to get there. There really isn't. And what you eventually come up with the way that you trade, will not suit anyone else. Okay, that's the way that you're gonna be making money. I mean, when I talk to my friends, I say, George, you trade the 5-minute chart, isn't that too fast? And wow, you also get up and you try and trade the first 2.5 hours of the Asian session, and then you're in the European session, and then you're in the US session. I mean, that's what suits me. That's what I thoroughly enjoy. That's how I've earned my doctoral degree in trading. That's who I am. That's how I end up generating the kind of profit that I'm generating. I've had to go through them. I've tried to conform myself to what I've seen other traders do, and it's been miserable. Then you end up staying in the trials and fires and never actually emerge to become the unique trader that you ought to be. So that's the second thing. You got to earn your doctoral degree, your doctorate, through the trials and fires of live trading. Don't give up, just persist with it. Then the third thing, out of all of this, you have to define your strategies. I cannot overemphasize that. The market is always moving. There is always opportunities before us, but you have to define your strategies. You have to know exactly how you're going to trade and how you're going to make money. I mean, we look at what we put up before, and I think I said much earlier on when we were here that I'm not going to take any trades here because I didn't get breakout here. And if I'm going to take any trades further on, I need to see a breakout and a pullback. That's a defined strategy. It's written down. That's how I trade. That's how I look at the market. And until I see that, I'm not going to take any trades. I can look at it and say, well, let's wait for it. And that's, I don't know how to overemphasize it. You have to define your strategy. This is how I trade, and this is how I trade. If that makes sense. So in which case we can wait. Now, what it means by defining strategies is that you might find something that you're comfortable to trade. And if you do find something that you're comfortable to trade, that I'm not trading, as long as it's a defined strategy, then you must feel free to go ahead and trade that. So looking at gold, for example, we do now have a candle that's closed above the moving average. That's fantastic. I can see that lower high or that previous high. I don't have a problem with it. Either I get a pullback and a higher low, or I get a breakout above that, then I wait for a pullback to the moving average and I trade. That's the strategy, right? Now, talking about defining strategies, here there's three things that you need to know about defining. So one of them has already been raised from the discussions that you have. You've got to know yourself. Okay, if you are trading and 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 you're not enjoying it, and you're not passionate about it, and you hate it, it doesn't mean there's anything wrong with trading. I mean, trading is trading. It just means you've not understood how who you are fits into this business. Okay, fits into trading. You've got to understand that. You've got to know who you are. It sounds pretty simple, but sometimes we trade against our personality, and you end up hating it. You end up getting mistakes. We just do so many things. Understand yourself, and then that's number one. Understand yourself, and then secondly, we spoke about understanding price action. So there's a subset between my personality and how I trade and the price action. That's those things you must bear in mind. But there's something else that you need to go through. You need to find ways to tap into the deeper and higher parts of your brain. I'm sure that probably makes sense. Whichever way you've come across it, we use 5%, 10%, 20%, doesn't matter, but we don't use all of our brain potential. But you can use all of your brain. Nothing says you can't stop. There's no way says you can't stop using it. But you've got to learn to access those deeper or higher parts of our brain, because in those deeper and higher parts of our brain, that's where we access all creativity. That's where higher cognition processes take place, and more importantly, that's where we learn. That's where we can make complex decisions. When things are moving fast before you, you need to have the ability to make quick and fast, complex decisions. Okay, but I jump in, same risk, lower risk, or take my profits out, don't take my profits out. Whether it's the 5 minute or the hourly or the daily, these higher and deeper parts of the brain really enable you to function with highest levels of creativity, higher levels of cognition, and the ability to make complex decisions. That's what you need to tap into. And when you tap into that, it really becomes easy to create and generate higher levels of profits. So now, how do we access the deeper levels of the brain? I've just made a note here. You've got to find your own pathway to do that. I have my own pathway, and I'm not going to delve any more into it besides telling you what it's called. There was an earlier Actions to Wealth coaching live webinar where I shared a lot about how I access the deeper minds of the brain for me, those levels of creativity, higher cognition, complex decision making. But it's my own pathway. And for just as far as I'll go here, that pathway is called the Mind of Christ. And if you want to discover more, get in touch with the Actions to Wealth administration team, and we can connect and talk about that. But that's my pathway. But you got to find your own pathway to really find out how to access the deeper levels and the higher levels of the brain, because that's what you need. The market is there. You are trading the global markets. You are trading the U.S. economy, the European economic zone, the Canadian economy, the Japanese economy. You trade in a commodity that's widely available. You trade. It's all there. And all you gotta do is be able to present your strategies and extract your wealth from the market. But you need to access the deeper parts of the brain. So I'll leave that to you. That's the fourth thing you gotta have. So number one, become a master at written price action. Number two, earn your doctoral degree in trading through trials and fires of live trading. You gotta go through that. The third thing, you gotta define your strategies. The fourth thing, you need to tap into the deeper and higher parts of your brain, and you gotta find your own pathway to go through that. I don't want to offend anyone, so I'm not going to go through and discuss some that I've come across that some of my other colleagues use. But that I leave up to you. Number 5, you have to choose your products. So you've got your strategies, but what are the products that you are trading in the market? As you can see on my charts here, we currently have there's 4 products that I'm trading. 3 currency majors: euro versus dollar, USD CAD, USD yen, and gold, which I've added in this month of April. And you can trade anything. It can be back to the question that was asked. It could be trading stocks. It could be any stock that you have up here. It doesn't matter. It could be any index that you have. It doesn't matter. It could be silver. It doesn't matter. You know, any product that you decide to trade in does not matter. It's got to be something that you enjoy trading, that suits your lifestyle, that you're passionate about. Then decide what it is and stick to that. And only change. The reason I've added gold in is that I'm comfortable to add a 4th product because I can process the information. I'm not rushed. I'm comfortable, and I'm happy with those 3 currencies that play that are significant contributors to the dollar index and the gold commodity. So you could have one. I think I've mentioned before, for a long time, I trade 1 currency pair. You can have 2, 3. You can have 20, provided you can trade comfortably, at rest, at peace, without rushing and stressing yourself. So that's number 5, choose your products. Number 6, you have to implement. Now, implementation is only successful if you've worked out your personality, okay? Because within your personality comes the ability to just sit and watch and wait for your strategies to unfold. There's no need to rush. If it doesn't unfold, it doesn't unfold. If it unfolds, you implement. You have to execute. You can't wait for perfection. Okay, that's why I consistently talk about at best I'm looking at 60% probability. Okay, if you try and wait for 100%, there can never be 100% certain that if I buy, the market is going to go up. Because if it was 100% certainty, then no one would be trading the 0% certainty. That makes sense. Who's going to be selling? If everyone is 100% certain the pattern is going to go up, it doesn't work like that. So always work on 60% and surprise yourself when you get to 70, 80% when the trend is strong. In implementation as well, what it means is if I take a trade and one of my strategies I've set up and I've executed it and I'm managing it well, if the market turns, if the thesis that I held that, for example, we're talking about double bottom, high, low, and the trade is triggered, if it reverses and it's clearly reversed, then I have a choice to make. I can't sit there and deny that the market is reversed. I must try and get out, most likely with a small loss before I'm stopped out. But if I'm stopped out, I should be comfortable with it because in defining my strategies, I have used the trader's equation. Okay, risk, probability, and return. So my risk is fine with me, which means if I have these 4 products here and I execute 4 trades and I'm comfortable, everything is set up. But if the market reverses, for whatever reason, a news announcement that I hadn't taken into account when I was looking at Forex Factory, and all 4 trades get stopped out, I can't beat myself up and call myself names and whatever. If I'm doing that, it means I'm gambling. Okay, why am I gambling? I'm gambling because I haven't risk measured correctly. If I'm putting 4 trades on, and if all 4 got stopped out, then I must say, okay, I got stopped out. Let's keep trading because I've measured my risk up front. So the trader's equation is something absolutely important to bear in mind. But having said that, to put it all together, a 20% profits month like I had in March, absolutely fantastic. And as I said, if you want to see the proof of that, just work through the admin team. I can send you the history from the broker. Very good returns. I mean, that 20%, I worked it out over 5 years. If you had 500 bucks and making 20%, I mean, you can make 28 million if you consistently make 20% risk, etc., etc. You know the clause. But I don't want you to get stuck on 20%, guys. I've shown you the possibility if you've been in the market, when it's set up, if you have been focused when it's set up, if you have executed correctly when you set up. The yen yesterday presented what could have been a 20% trade. So that the number of number of trades that you took in that move, you could have made 20%. The point is, these 6 things that I've mentioned are the things that you have to absolutely work on. Then, if things set up when you're in the market, you just have to execute, and you will make the money. So just to recap, as we close, number 1, become a master at reading price action, and you become a master by mastering everything that your teachers teach you. Number 2, earn your doctorate through the trials and fires of live trading. Everything you go through, the frustrations, the mistakes, the disappointments, the pains, the hurts, I'm not going to trade again, I'm back again. That's part of earning a doctoral degree in trading. Find your own unique sliver of knowledge that makes you unique and different. Number 3, define your strategies. How many strategies do you trade? And in which time frame? I've got 5 distinct strategies that I trade, and I trade off the 5-minute time frame. That's well defined. The 4th thing, tap into the deeper and higher parts of your brain. Okay, you have to tap into the deeper and higher parts of your brain, because that's where you're gonna access just these unique and awesome, powerful energies, creativity, higher cognition, and complex decision making. And I said, in doing that, find your own pathway to do that. You have to decide your own pathway. I've said that my own pathway is what I call the mind of Christ. That's what I use for trading, and the admin team can give you links to the presentation I did beginning of the year, or we can explore that separately. 5thly, choose your own products. What are you going to trade? How many currencies? I've got 3 currencies, then go choose your own product and stick to that. And then the 6th thing, implement. You just have to do not change your strategies just because something is happening in front of you, or you've heard what someone else says. Implement what you've decided as your strategy. So as we close today, I hope you found that useful. And if you want to discuss and explore further, please just get in touch with the Actions to Wealth administration team, and we'll find a way to connect and do that up. So that was April, 20% profits in the month of April. I loved it. And as I showed you on the yen of yesterday, USD yen, just as we close here, I want to just put that up again. This is what I am always. This is what I'm looking for. This is what we're looking for. Let's hope for everyone that you get this kind of setups where you just continue to trade and optimize the profits that you make. So, can we make money in this business? We certainly can. So that's a Canadian. I clicked in 1 last minute. That's what I was looking for. So you can analyze that, and if you want, you can just get in touch with me. I can unpack it for you and show you how that alone could have been a 20% trade. Just this move from here to there. In a couple of hours, you'd have made what I made in 1 hour. Thank you guys. I've really enjoyed it, and we'll catch up again next week.